Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button on your bottom right. And once you're done with that, you can definitely leave your comments on the comments section. Please make sure that you subscribe to this channel and also that you invite your friends to also like this video and also subscribe to this channel. With that out of the way, I'd like to make some few announcements. If you're in Amaskral, I'm pleased to let you know that we have contact lessons that are taking place at Tusanang Daycare Center next to Mabuatlo Primary School. And all you have to do to be part of us, you have to pay a registration fee of 100 Rand, which is once off. And you also have to pay monthly fees of 250 per subject. From there, you'll be free to become part of us as we conquer with education. If you're struggling with your academics, I'm pleased to let you know that we have online lessons that are taking place, which are also hosted by Chauke Tutorials. So we have 3 packages for you. The first package, you only pay a price of 350 and then you get 2 online lessons per week. All these lessons are recorded as they occur. On package number 2, which is only 250, you get 1 online lesson and you also get 1 pre-recorded lesson. A pre-recorded lesson is like this one that you are currently watching. And for package number 3, it is only costing 150 and you get 1 online lesson per week, which is also recorded as it occurs. So at the end of the lesson, I'll be able to send you a copy of that particular lesson. If online lessons are costly for you, we have contact lessons that are taking place. You only have to pay 350 per month and you get 2 contact lessons per week. So I'll be able to come into your place and offer you these lessons at this affordable price of 250. Remember, I'll be seeing you 2 times in a week at your convenience. If you can't afford the first option, you have option number 2, which is only 250. And then I'll only see you once in this lesson. Remember, it is face-to-face interaction, so I'll be seeing you once. Okay, so you have an option to decide whatever option is suitable for you. Once you have the best option that is suitable for you, you can contact us using the details that will appear at the end of this video. Now, before I proceed with the lesson, I'd like to make you aware that this question paper that I'll be dealing with is from the KZN Grade 10 Accounting Common Test paper. So if you want to download it, you can visit the KZN Department of Education and you will definitely be able to access it. Okay, now in today's lesson, or in tonight's lesson, we'll be looking at the accounting equation. I decided to look at this accounting equation because I felt that as most learners are now busy with their common tests, it might be important for us to look at one of the common papers that has been written in any of the provinces. Okay, so I decided to look at the KZN one. I hope this lesson will be beneficial for you. So now on this question, I'll only be looking at question 1, okay, which looks at the accounting equation. Now, before you do any question paper, or before you treat any question paper, it's very important for you to make sure that you familiarize yourself with the instructions and information. But because I'm recording this and I'm trying to make this lesson to be very short, I'm just gonna get into what is important for me. But then for you, you must make sure that you read all these instructions, as they are very important. Remember, instructions are like the GPS. Without GPS, you cannot get your direction. So remember that instructions are very important. Before we proceed, I want to caution you on something that is very important. Most accounting students are struggling with time management, which is very important. So you want to make sure that whenever you attempt any question, you stick to the time limit that you are given. In this question that we are given, we're supposed to complete this question within 28 minutes. But then obviously for me, because I'm recording and I'm explaining to you, I might take a bit more than 28 minutes because I'm explaining, remember. So make sure that when you do this question, you manage your time, you stick to the 28 minutes that you are given, okay, or else you're gonna lose time on other questions. Now let's go into question 1. So on question 1, as they've shown us, it's 31 marks, and then you're supposed to do it in 28 minutes, like I said. So in this question, we are dealing with the analysis of transactions, and we know that when we deal with analysis of transactions, we are dealing with the accounting equation. So normally when you do the accounting equation, you want to make sure that you understand what type of business are you dealing with, what type of business are you doing transactions for, so that you can be able to understand whether it is a business that sells goods and services, or it is a business that sells products only. Remember, when you sell products and when you sell a service, there will be a bit of differences in terms of your recording, especially in the cash receipt journal. So you want to make sure that you are aware of the differences between service and businesses that sell products. So let's look at the information that they gave us. They're saying you're provided with information relating to MEG traders. One of the most important things that we must be aware of is to always know the name of the business that you're dealing with. So we know the name of the business is MEG Traders, and they're saying that this business is owned by Sabelo Pagati. Okay, and this accounting equation that we're supposed to do, it is for the month of February 2020. In accounting, your period, your time is very important, so you want to make sure that you know which month are you preparing the accounting equation for. Now in this case, what they've done, they gave us an example, but before we look at that example, I felt that it will be very important for me to just give you some fundamentals that you need to be aware of when you deal with the accounting equation. Now there's this principle called Allego, ne? It's called Allego. You need to be able to understand what does Allego mean. Firstly, in terms of A represents the assets, okay? And then in terms of the assets increase on the debit side, and then assets decrease on the credit side. This information is very important. It will guide you when you do your accounting equation. You want to make sure that you understand how do the elements increase and decrease, okay? And then for L is equals to liabilities. And then we know that in terms of liabilities, they increase on the credit side, and then they decrease on the debit side. Okay, so we are done with this. Let's look at expenses. In terms of expenses, remember that E is equals to expenses. In terms of expenses increase on the debit side, and then they decrease on the credit side. Okay, so you want to make sure that you are also aware of the E for Allego. Okay, and then now in terms of G represents the gains or income. So this is equals to gains or income. And then we know that gains or income increase on the credit side and then decrease on the debit side. Okay, now let's look at the O part of the Allego. So we're gonna look at the O. O is equals to owner's equity. We know in terms of owner's equity we have capital. So now in terms of capital, we know that capital increases on the debit side and then decreases on the I made an error here. So for capital, you must always be careful when you do these things. We know in terms of capital, the increase is on the credit side and then the decrease is on the debit side. Okay, so please make sure that you watch this entire video so that you can be able to recall what I've said. And then for number 2, we have drawings. Now in terms of drawings, we know that drawings increase on the debit side and then they decrease on the credit side. So you can already see, let's just check if everything that we've written here so far is correct. So we said assets increase on the debit side and decrease on the credit side. Liabilities, we said they increase on the credit side and decrease on the debit side. Expenses, we said that they increase on the debit side and then decrease on the credit side. Gains or income, we said they increase on the credit side and decrease on the debit side. Owner's equity, we said that capital increases on the credit side and decreases on the debit side. And in terms of drawings, we said that drawings increase on the debit side and decrease on the credit side. In terms of you being able to understand this much more better, there's also another lesson that I did in terms of the accounting equation, but in that case I was just using my own personal example. So if you want to see how questions are asked in terms of tests, watch this one. You can also watch the other lesson that I did on the accounting equation, just for more understanding. Okay, I'll make sure that I pin all the relevant lessons that are to this one on the comment section, so be cautious on that. Make sure that you go through all those lessons that I would have listed, because at the end of the day they will help you to be able to understand what we are doing. Now let's look at the transaction that we're given here. Here they're saying that we bought stationery on account from Shukela Traders for 500. Okay, and we know that stationery, it is an expense, so this means that here we're going to debit stationery. So you see, I've already identified the account, so we're going to debit stationery here. And then because they're saying that this was on account, you can see that we're going to credit creditors control, because why Kekas colored. Okay, and which is what they've done here. You see, they've debited stationery and they've credited creditors control. And then in terms of the effects on the accounting equation, they are saying that our owner's equity will decrease, and this is because, remember, the more you incur expenses, the more your owner's equity decrease. And in terms of the liabilities part, because we bought on credit, our liabilities will go up. Okay, so now let's go and look at the examples that were given. So here they're saying our supplier, UNISA Traders, charged the business an interest of 12%. So we are charged an interest of 12%, and they're saying it's per annum. The moment I see per annum, I think about 12 months, and they're saying it's on an overdue account of 12,000 for 2 months. So you can see that we are dealing about something like an interest that has not been, we've not paid our account, so they're charging us interest on that. So you can already see that how it's gonna look like. So they're saying that provide for the outstanding interest. So now when it is like this, you normally debit the accounts that are affected. It's your interest on overdue account and your creditors control, because your suppliers here, they represent the creditors. Okay, so this one will be the account that is credited, and then interest on overdue account, it will be the account that is debited. Okay, so let's quickly do the calculation. So when we do the calculations, we deal with the art principle, and then we know that the amount that we have is 12,000. So we're going to have 12,000 multiplied by 12 over 100, and then multiply by 2 over 12. The reason why it's only for 2 months, it is because our accrued interest is only for 2 months. Okay, so this is the interest that was not calculated, so we are just doing a provision for that outstanding interest. So you're going to take your 12,000 and say 12,000 multiplied by 12 over 100, and then you multiply it by I think 2 over 12, because only 2 months is outstanding. So your answer here, you are getting 240. So this 240 will go to here as the amount 240, and then the account debited is interest on overdue account. This is more like your accrued interest. Okay, So remember, in the income statement, that interest that is accrued, you will add this 250 on that income statement under the interest expense. Okay, but we're not dealing with that for now. Here the account credited will be creditors control. Okay, and we need to be careful. We said that interest on overdue account will be debited, and then we know that interest on overdue account, it is definitely not an asset, so this won't affect our asset. And then the more we incur interest expenses, the more our owner's equity decreases. So here what you do, you show plus or minus. So we're supposed to show here that our owner's equity will go down, and remember that the amount that it will go down by is 240. Okay, and here our liabilities will increase because remember, this interest is overdue, it has not yet been paid. Okay, so let's go into the next example, and here they're saying goods sold on credit. The moment I see that we sold goods on credit, I'm thinking about debtors control. So this is the account that we're going to debit. Okay, and then they're saying they were sold to Angel Shabangu for 6,000, the selling price. So I'm already seeing that the account to credit is sales, so this will be credited. Okay, and they're saying markup on cost is 50%. This information is very important in such a way that you'll be able to use it to show the effects on how does this affect trading stock and your cost of sales, but we will look at that later. Hence here they're saying that you need to make 2 entries, but let's start with the first one. The first one, remember we said that we have debtors control, so this means that the account that will be debited here is debtors control, and then the account that will be credited at sales. Okay, so we're going to credit sales, and then the amount, remember it's 6,000 from the selling price. So we need to think, how does this affect the accounting equation? So because here we have debtors control, it means that our assets will go up, so it will be a plus on the asset. Remember we're saying that debtors control is debited, and we know that debtors control, it is an asset. So because it is an asset, we are going to increase our assets here, hence the plus. And then in terms of sales will increase our owner's equity, so because we're selling, we'll have plus here, and then this won't have any effect on the liabilities, so you can write 0. Okay, and then you also need to show the part where you indicate how does this affect the stock. Here they're saying that we need to show the entries also for the impact on our inventory. So we know each and every time when we sell, we are debiting cost of sales, so DR cost of sales. And then remember, each and every time when we sell, the stock that we have on the shelf becomes reduced, so we will credit trading stock. So we're going to look for the cost price. So in this case, because they gave us information for us to get the cost price, we're going to say cost price is equals to, remember our cost price is at 100%, right? If you want to understand how to get your cost price, I will leave a link to the lesson that I did on calculating selling price and cost price. So for now, because this is another lesson, I'm gonna do the shortcut. Okay, so it's gonna be 100 over 150. This is because we want the cost price, cost of sales, and then we given the sales. So the sales, remember sales include its cost plus your markup, so hence here we have our sales is represented by this 150. Okay, and then we multiply by the amount that we given, which is 6,000. So our cost price will be 100 over 150 multiplied by 6,000, and we have 4,000. So this is the other part that they were expecting you to show. Okay, so we go there, and then we say on this part we're saying we're going to debit cost of sales. credit trading stock. Remember, our trading stock is being reduced because we are selling. The stock that was at the shelves will decrease because we are now selling. So we know that when we have something like this, our trading stock, because we're saying trading stock, will be credited. Trading stock is a form of an asset, so if trading stock is reduced, we would have a minus on the asset. Okay, and then cost of sales is an expense, so our owner's equity will be decreased each and every time when we incur an expense. Remember here where I was showing you that our owner's equity, in terms of expenses, I said that they increase on the debit side, and because here we are dealing with owner's equity, remember owner's equity increases on the credit side and is reduced on the debit side. So because we're incurring expenses, it means our owner's equity will go down, hence the minus here. So this debit cost of sales is represented on the owner's equity by this negative. We're saying that the owner's equity will go down by negative 4,000. And then also in terms of the trading stock, because we are taking a stock to sell to customers, we are also losing the stock that we have. That stock will go to the customer, hence we have that 4,000 as a negative on the assets. Okay, so we're done with number 2. Let's go to number 3. They say the owner took merchandise for his personal use. The moment I see personal use, I'm thinking about drawings. Okay, so this is the account that we're going to debit, and then in terms of the merchandise, I think about trading stock. This person is taking the stock that is on the shelves, so trading stock will be credited. Okay, so we come here and say account debited will be drawings, account credited trading stock, and we know that the amount is 800. Okay, so let's check here. Yes, it's 800. So how does this influence the accounting equation? When drawings increase, remember when I was showing you on the owner's equity, if you look here, I said that drawings increase, right, on the debit side. So owner's equity is reduced on the debit side. So when we do drawings, we are reducing the net worth of the business. So on the owner's equity part, we will have a minus here. Okay, and then in terms of the assets, we'll also have a minus, because remember we are taking the stock that we were supposed to sell and use it for personal purposes. Okay, so we're done with that part. And then where here it's supposed to be on the liabilities, here it's supposed to be 0, and also here 0, because there is no effect. Okay, so let's go to the next question. The next question says the fixed deposit of 20,000 with Mhlanga Bank has matured. The bank deposited into the business account 22,500 including interest. What we know here is that we had a fixed deposit, but then this fixed deposit that we had increased, was reduced. That's why the bank is giving us that money, because it has matured. So when it has matured, the bank gives us back that money that we invested plus interest. Okay, but when you record a transaction like this, you need to be able to separate the part of the fixed deposit and also the part of the interest on fixed deposit. So I'm going to show you that part. So here the account that we are going to debit on the first side is going to be bank, because remember we're receiving money in that bank, and the account that we're going to credit is fixed deposit. Okay, and then the amount is 20,000. So in this case, what is happening, our bank as an asset is increasing. Okay, but then remember our bank as an asset is increasing because we are getting money for the fixed deposit. So the fixed deposit that we had there at that bank will no longer be there, so our fixed deposit amount will go down also by negative. So this means that this transaction will only have effects on the assets on the first part. Okay, so let's look at also the part of interest on fixed deposit. So because they are also paying us for interest, we also have bank being debited here. So we'll have bank, and then the account that will be credited for interest income is interest on fixed deposit. Okay, and remember they said that the bank gave us 22,500, so they gave us a total of 22,500. If we minus that 20,000, we will get the interest. So the interest here is 2.5, so that 2.5 will come here on your amount. Okay, that 2.5 will come here, and then because we're getting that 2.5 for interest in our bank account, we'll have a plus on the assets. Okay, so it means that our assets will go up, and then because we are also earning interest on fixed deposit, our owner's equity will go up, hence we'll have a plus on the owner's equity and 0 on the liabilities. So even though I was explaining, I was able to finish this within the required time. So you need to make sure that you manage your time very wisely. So remember that, as I promised, I will pin the lessons that are related to this one on the description. So make sure that you are aware of those lessons. Make sure that you also watch them so that you can be able to understand that accounting equation. And this lesson, I think it is also suitable for learners who are doing financial accounting 1502 with UNISA. This will also be beneficial for them. So if you know anyone who's doing FAC 1502, let them know about this lesson, share it with them so that they can be able to understand much better and prepare for their assessment. Okay, with that out of the way, with the lesson being completed, I am completely gonna be signing out. So thank you for watching. Remember, don't forget to leave your comments and tell me how you felt about this lesson, and also invite your friends to subscribe to this channel to watch this lesson, and also like this lesson so that they can boost us with the algorithms. Remember, the more you like and watch our lessons, the more people become aware of them. So give us that opportunity to make a difference in people's academics. May God richly bless you. Shalom.